This is the Construction Leading Edge podcast from constructionleadingedge.com and buildermasterclass.com. My name is Todd DeWalt. It's my job to help you, the business owner, eliminate chaos, maximize profits on your projects and in your business. And today we're going to be talking about lumber prices, and we're going to hear from Kyle Little. Kyle is the Chief Operating Officer at Sherwood Lumber, a very large lumber distributor from all over the country, and I think Kyle said they will move 1 billion with a B board feet of material. And here's what you're going to get out of this interview. Kyle's going to talk about what's going on behind the scenes of skyrocketing lumber prices that you may not know about. He also talks about how the fallout from the 2007, 2008 housing crisis connects to what's going on now. We talk about, is this the new norm with lumber prices? Is there a bubble? Is there going to be a housing crash? What does the supply chain working itself out look like, and how is that going to help with pricing and availability? This one's really interesting. If you're wondering, how can I, as a developer or a contractor, lock in my prices for a project that's going to happen 6 months, 9 months, 12 months out? We answer that question. Kyle also talks about some tips for transitioning leadership from one generation to the other. What does the future of lumber prices look like from his perspective? And a variety of other topics. Lots of great stuff. If you're concerned about lumber, if you're just curious about what's going on, and if you're interested in what you can do to mitigate the risk of that, be sure to listen. This is going to help you out. A couple of resources for you before we jump into that interview. The construction industry is facing major headwinds. More than 80% of contracting firms report that they're having trouble finding skilled labor, and greatly inflated material costs are eroding the bottom line. To be profitable, you need to be able to do more with less time, less money, and most importantly, you really need to manage your critically essential labor force with greater precision. Let's face it, the inefficiency of old school manual data entry and paper pushing is wasting thousands of dollars in valuable time every day. You need to know what's happening on your job sites in real time. The solution is Struxy labor productivity software. Built on over 50 years of construction tech innovation, Struxy replaces outdated paper timesheets and production reports with software that updates you every hour on labor performance. Struxy labor productivity software tracks your crews in the field down to each individual worker across multiple projects, and allows project managers and job site supervisors to track labor production down to the cost code. Fully customizable reports allow you to establish ambitious but realistic daily production goals and estimate how many crew members and workdays are needed to complete a job on time and under budget. Struxy lives in the cloud. It can be deployed on relatively inexpensive tablets and laptops, and it is incredibly easy to use. Plus, by reducing time clock rounding errors, it will pay for itself on your first project. Visit Struxy.com to estimate your annual savings with their cost-saving calculator and to sign up for a 30-day free trial. That's Struxy.com. Struxy.com. Software built for hard work. If you're a busy construction business owner, there's a pretty good chance that you don't have good visibility into your financials. You could be getting financial reports too late, or maybe not getting financial reports at all. Or maybe you're not keeping your books up and you really don't have any idea what your numbers are. Well, if that's you, you're not alone. Scott Schweiger said this: "I highly recommend Apparatus Contractor Services. My small startup construction company was over a year behind with its bookkeeping. I was wearing way too many hats, and ultimately the books suffered. They provided bookkeeping solutions that got us caught up in the systems to stay on the right track. I'm so happy I'm turning over payroll processing to them as well. Elizabeth Evans said hiring Apparatus was a game changer for our business. They've allowed me to grow our construction company over 100% since we hired them about a year ago. Bill, president of Spice Industries, said hiring Apparatus was one of the best business decisions I've ever made. They have almost completely freed me up from sitting at my computer reconciling budgets with my own makeshift system. So if you want to offload your bookkeeping or payroll headaches, or you just want better reporting, the Apparatus Contractor Services team may be able to help you. Visit goapparatus.com to hear from other construction business owners and see how Apparatus can help you. That's goapparatus.com. All right, without further ado, here's my conversation with Kyle Little, Chief Operating Officer of Sherwood Lumber. Enjoy. All right, Kyle, welcome to the podcast. Thanks for being on here. We're going to talk about a hot topic right now. Here we are in late May 2021, which that hot topic is lumber pricing and availability. And we'll get into your background in just a few minutes, but let's jump into this. What's going on behind the scenes of crazy pricing and availability of lumber and panels that most people don't know about? There's a lot of talk about it, but what are some things going on behind the scenes that most people aren't aware of?
Well, first off, thanks, Todd, for having me. I'm very much looking forward to speaking with you today. But to get to your question, I think the biggest thing a lot of people don't recognize in the lumber industry is, or that the buyers of lumber, is the transition that we had from 2008 to now. We didn't get here by accident. We got here because lumber had to assimilate to the demand that was in the marketplace, or adjusted demand in the marketplace at that time. When you went from 2 million housing starts to 400,000 housing starts, that was a major change in what needed to happen in the supply chain. But so everybody knows that. But what happened after that? And our growth, came into that period of time where that assimilation of supply and demand, that recalibration, I should say, supply and demand took time. And the growth over that period of time was very slow and steady. However, there was a big change in the industry on the supply chain side, and mills were overproducing prior to that, and then had to go and essentially stop on a dime and change the way that they were going out there and getting fiber from the forest to the marketplace. And so the movement of that really caused a transition of small suppliers really becoming, for lack of better terms, extinct over that period of time, because there wasn't enough demand in the marketplace to support their businesses. So the smaller moved out, the bigger got bigger. And through that period of time, there was virtually no CapEx spent in expansion, because we saw this slow demand curve. And what happened, what we experienced in COVID, was more or less an accelerant of that. But it wasn't the cause. We were going to see steady demand growth over a period of time because we underbuilt for such a long period of time. So if the industry said that we needed to go and build 1.5 million homes on average for the next 20 to 30 years to meet up with the population growth, we were only building 800,000, 900,000, a million, 1.2 million, 1.3 million, on essentially 1.1 to 1.2 million houses for 10 years. So we were under supplying the market by roughly 300,000 starts a year for 10 years. So that's 3 million homes that there's a big gap, and now everybody wants a home at the same time. So that is a big part of what we are dealing with right now. On top of it, the transition from BC to the U.S. South in the fiber wood basket in North America. BC used to be the predominant source of wood fiber for the last 50 years. And when they had to overcut material to get ahead of an infestation of the mountain pine beetle, was going to be a period of time in the future where they didn't have the logs to support the sawmills in that area. So the BC sawmills Weyerhaeuser, West Fraser, Canfor, Interfor. Where did they go and invest for their futures? They bought independent lumberyard or sawmills in the U.S. South or greenfield new operations in the U.S. South to go out there and be able to secure their future in the forest products business, because that's where the largest and the cheapest fiber basket is to go out there and produce lumber. And right now what we're dealing with is really the marketplace recalibrating to that new phenomena where the Pacific Northwest and BC were the predominant drivers of the supply chain to now being the U.S. South. And then when you add on crazy demand on top of it, what does that create? More uncertainty, more bottlenecks, and ultimately, when those things happen, panic, right? So people then would go out there and bid up the price of lumber because they need it when they can't find it in what was historically their normal supply route. So that's what I think really where we are. What happened in COVID was likely to happen, probably just not as quick. We're going to go to extraordinary lumber prices, and we probably will trade in extraordinary prices relative to the last 20 or 30 years. But COVID just kind of really, for lack of better terms, threw fuel on this fire that was already smoldering prior to 2020.
Yeah, it's interesting to look at the price of lumber over the past 20 years, how relatively flat the price of lumber was over the past 20 years. It's also interesting to look at the housing starts back to early 2000. You see this climb from 2000 to 2007, all the way up to 2 million starts a month. And then it drops down, as you said, 400,000 a month. And even right now, from what I remember, we're approaching where we were in 2004, maybe 2004, 2005 in terms of starts. But there's all of this pent up demand over the past 13 years that hasn't been there. And so part of it could be that lumber prices were really flat for a long time. And is that a fair statement? Have lumber prices been pretty flat for the past 20 years?
So prior to 2018, lumber used to trade somewhere between, if you use the Western Canadian mill price, that's the derivative that's traded on the CME. So if you use that price, they would trade somewhere between $250 and $400, $150 a thousand range. That was from peak to trough, the movement in lumber year over year. And prior to 2017, the average was like $132 a thousand. So it was very tight. We had a few times in our history where back in 1993, we had the closing down of federal forest lands in the Pacific Northwest because of the spotted owl, which is a major issue, and they didn't know if they were going to have fiber supply and what have you. That spiked the lumber prices up, similar to what we just experienced, where prices more than doubled twice in the year, in that year between 93 and 94. And then we had the crazy move up in with easy money being poured out of the late 90s and into the early 2000s, which created our most recent housing boom. And then the collapse from those prices. But to answer your question, absolutely. Like, it's been very, very stable throughout. And you look at other commodities, not so much. You see oil, corn, which corn is doing right now, the metals. They typically have 200 to 300% moves. That more normally over, let's say, a 30-year history. We've just experienced, this is the first one we've ever experienced in the lumber world. But what we have found over time is cyclical waves. And in those cyclical waves, price goes up really, really hard, very, very fast, and then stays, and then retrenches a little bit, then ultimately trades in a higher range during those cycles. And in lumber, we did a lot of research last year specific to this. And because everybody was talking about what kind of really spurred it was everybody was talking about, is this the new norm? Prove it to me. How is this? Can you tell me that this is going to be the new norm? Because the norm in lumber was what goes up must come down. And usually you take that stair step up and ultimately ride the elevator down. And then you get back to what we traded in, which was that normal $130 to $150 range that I just talked about. However, when doing this research, we found two data points that indicated change in a cyclical pattern. And in lumber, it's happened 7 times before what we just experienced in 2020. And in those 7 times, by looking at these 2 data points, it showed us that the cyclical pattern, like I said, happened 7 times prior. But within that pattern, it created a bullish cycle that lasted as short as 9 months and as long as 41 months. And where we are today in that pattern, this is the 8th time that it's happened. We're currently at month 11. Next month will be month 12 of this cyclical pattern. So, theoretically, saying if we do half of what of the average of those previous 7 times, we still have roughly 12 more months to go. So this could be somewhere between an 18 to 36 month cycle that we're seeing here. And does that mean that lumber is going to trade at these extremely high numbers? Probably not, because that's typically happens when there's a major shortage of supply and a heavy increase in demand. But I wouldn't be surprised if we continue to operate in a higher than normal demand curve and supply starts to incrementally catch up, which will ultimately keep us in a higher than normal range for the foreseeable future. That's what we were planning on, and we really believe that, which would lead you to think that lumber should not trade at 400 times what it did last year, but it wouldn't be really surprising to me if we trade somewhere more than double than what we would normally see in the last 20 or 30 years. So we were currently experiencing a retracement, as far as the futures prices. I think that's going to ultimately put us in a price discovery mode to create that bounce, and that bounce will be at a higher low than what we've experienced in the past.
Interesting. So let's pause for a minute, talk about who you are and your business and what you do there.
Okay, great, Todd. My name's Kyle Little. I am the Chief Operating Officer of Sherwood Lumber. We are a family-owned and operated distribution wholesale business, and we operate reloads, or I should say distribution centers, across the United States. They're mostly geographically located east of the Mississippi, and we're selling product in all 48 continental states in the U.S. We have currently, we're on pace to trade more than 1 billion board feet of lumber across the U.S., and more than 70% of that billion board feet would be something that we physically touch and hold in any one of our distribution networks. So the other 30% would be material that we drop ship. We're buying directly from a sawmill and drop shipping it direct to a customer base. So we really are an inventory focused organization. And we really look at that as the asset. The biggest value proposition that we provide to our customer base is quality material brought to them in a timely manner. And we really pride ourselves. Our tagline is "We'll be there." Our mission is "We'll be there" for impeccable customer, vendor, and associate experience. And we really live by that every day. That's our how-to, what we're going to get accomplished every single day. So that's a little background of Sherwood Lumber.
Yeah. You mentioned experience. This is something that some people would say, wow, a lumber company, somebody who deals in lumber, worrying about experience. What does your team focus on to provide a good experience for your customers? And first of all, who are your customers? Who are you dealing with? And then what does your team focus on to give them a good experience?
Okay, so let's talk experience at a variety of different levels. the experience that we're talking about in the customer side and who we're going out there and servicing. The customers that we focus on we're truly a business to business organization. We're buying from the producers, North American, European, and South American producers, buying that material in bulk, and then breaking it down and shipping it to a pro dealer retail lumberyard. We're not selling to a developer. We're not selling to a contractor. We're selling to the lumberyard that's servicing those other clientele. And we really focus on transparency in the marketplace. Our job is to really provide our customer base with an understanding of what markets are doing every single day. And with that transparency, then they can make a better business decision. Whether the market's going up, whether the market's going down, really doesn't matter. We have product for them, whether it's sitting in our distribution yard, whether it's sitting on a rail car being shipped from a sawmill, or it's a forward price order, where we're providing a customer a guaranteed forward price for a project that they need to go out there and service a year from now, and then delivering that product to that customer at that guaranteed forward price for a year from now. So we do a lot of different things and really focus on what that customer's requirements are. Every client that we have has an individual need that's different than the others, and they have a risk tolerance that's greater or less than the others. And we have to make sure that we can provide a customized solution to what they're trying to accomplish and how that they're going to manage their business and their portfolio every single day. So we don't look at it as just sell a transactional business, even though it is a highly transactional business. Our goal is to really make sure that we are providing value to our customer every single day, every single week, every single month on a consistent month-over-month basis. We're not in there for just, making one trade here or there. It's really trying to partner with our clients to help them navigate a really, really uncertain time, more so in the last 18 months than they've ever experienced in their career. But our customers, our clients have really latched on to what we're trying to do. And then we really try to listen to them, because as markets evolve, the needs change a little bit more, and we need to make sure that the way that we're operating our business can allow for that evolution as well. As far as experience in specifically to myself, I grew up in the lumber business as a young child in a family business in Eastern Pennsylvania. I did not go back into the family business because, my father would let me back into the business. He wanted to see me go out on my own and learn my own thing. And ultimately, he made a decision to sell it. And then so I stayed on my career path and did not really get outside of what I really knew, which was the lumber business, but with a financial background and this desire to really trade commodities. And possibly because we joke about sawdust in the veins, I really, gravitated to the forest products business and started out in working for a co-op, building materials and lumber co-op, and then working for a large national wholesale trading floor, and then got into the distribution side. So I saw from a retail to the producer to a co-op to a broker, got to dip my toe in a lot of different aspects of the supply chain, specifically in North America. And then here at Sherwood Lumber, I started out as a lumber trader, just like the 40 other people that work for our organization, and bought and sold lumber. Got to know our customer base, our vendor community very, very well. And with my experience in my own family's business, our owner asked me to help him transition his business to the next generation, and having empathy, having experience in knowing that is a little bit unique in a family business. How could I help him help our organization? And we come together as a management team to really set up the next generation. And we've done a lot of hard work on that, really focused first on culture and making sure once you have that culture right and getting people to understand really your vision, getting the oars in the water and and navigating tough times, let alone good times, being able to navigate those tough times became a lot easier in the last 2 or 3 years. And it's been really, really fun, to say the least, in what we've done. So that's, a little bit of background of the experience of how we look at things. And then from an experience level, if we look at our clients or or I should say our people that are servicing those guys, it's really about, knowing that today is going to be a little bit different than yesterday, but you do have to look at history and ultimately understanding where things could play out. And that does give us some indications. It does not mean that record is going to necessarily repeat, but it does give us a little bit of semblance of what could happen, and then starting to forecast the extremes. Be prepared for the worst, and ultimately, know that somewhere in between there is where ultimately it will play out. So we really have focused a lot on that, and knowing that even though we make decisions that aren't always right, being willing to learn from them and move on to the next opportunity and make the next decision is something that we've really focused on. So it's been a big thing in our cultural transformation here at Sherwood. It's been really fun.
I want to come back. I'd like to come back to the topic of transitioning leadership to another generation, but a couple of specific questions about lumber. So number one, when you look in your crystal ball, is there a probability? What's the probability of another housing crisis or a bubble, and why?
I think the probability is still, it's a concern. I don't know how high it is, but it's definitely a concern. Specifically, when you just looked at the data this week and saw the median home prices move up to the level that they have, affordability move up to the level we've had, and this cheap money continuing to be pumped into the system, could we get in, to some level of, too high of a capacity? I don't think it's that extreme yet, but I do believe that there is the potential for disaster. I don't think we're there yet, though. However, one of the things I would like to see is if we can keep things affordable, really see what the family formation of this next generation, the millennial generation, what that could be for us. I think the definition of a bubble is when you get to one extreme and it ultimately collapses and does that. And I wouldn't say that we are out of the water in regard to that in the pricing of lumber. I don't think we're there in housing, because I think we're so early stages of this generation really getting into really buying a home and doing all the things necessary. I think we've gone out of whack really fast, but there isn't enough inventory out there. There aren't enough sales comps out there to really give us a good number of what's really happening, because I believe that low end is aren't the things that are being built right now. They are in high demand, but they're not the things that are being built. And the things that are selling and the things that are being built are at the very, very high end. So it's making it look like these affordability numbers are getting into really, really bad spots. But I don't believe that is really what's happening long term. I think that's just a short term phenomena that we have to work itself through. And the lumber supply chain will work itself through. And it will be at higher prices. It just doesn't necessarily have to be at this extreme level that we've currently experienced. But I will not be surprised if the lumber bubble prices does break down at some point in the future. Like I said, we're at roughly month 11, month 12, moving into month 12 of this cycle. To move back to 30, 40, 50% of the most recent price move is not out of the question. And by the way, it does not change the bull cycle that we're currently on. That would put us in a much more affordable price range for building products in general. We just have to get through, what's happening right now in the short term when this peak demand is, really bidding prices way higher than what they need to be. But with that being said, it doesn't necessarily mean that they will go back to this 30-year range that we talked about earlier. I don't think we're going there. It's going to be at a much higher range than what we've experienced before.
You mentioned that the lumber supply chain will work itself out. What do you mean by that? What does that look like?
I believe that right now you have a combination of things happening in regard to supply. You think you have two of the largest players that throw a lot of weight around, and they have contracted a tremendous amount of volume, specifically this year in the first half of 2021. And their volume has put a tremendous amount, or taken a lot of open market supply away from the marketplace. However, I believe that preparation for this big ramp up of sales, albeit bigger than what we've experienced in 2018 or 19, probably it wasn't as big as what a lot of people forecasted, specifically the two big boxes that built this stuff. So I do believe there's inventory supply that is going to now be available as we move into the middle part of this year that was earmarked for the two largest consumers or I should say dealers in the marketplace. So we're going to see what that ultimately does to the price. Because what felt like we didn't have a lot of wood, it was just sitting. The bulk of it was sitting in, not just two spots, but the largest contracted customers spots. So you combine those two with, let's say, the 25 other major players in the marketplace that was really preparing for this big continuation of this supply challenge in 2021. They have wood, and they have a lot of. They might not necessarily have a lot of wood on the ground today, but they have a lot of wood that's committed to them on order or coming to them. Sales are good, but they're probably a little bit lower than what they've forecasted for that period of time, because they were forecasting for what we saw in Q3 of 2020, which was insane takeaway. So it's good. A 10% reduction in that insane takeaway, alleviates some of the needs that other people weren't getting. So I think we're going to have to see how that filters through, specifically over the next 60 to 90 days. On top of that, we've heard a lot of people talk about logistics, and it started with rail. Like wintertime rail speeds in North America slow. Cars or trains aren't as long, so they're not carrying as much freight. So that's a double whammy. So you have cars that are moving slower, they are carrying less freight, so it takes more time to cycle through, product that's produced from the mill that ships to the customer, takes that empty car back to the mill, and so forth. So now we're starting to see speeds on the CN, the CP, UP, BN, all of them have gone back to their normal speed. So like what was that turnaround time was much, much longer 3 months ago. Now we're back to what you'd see as normal speeds, and products getting to the market quicker, and mills are able to reload those cars quicker. So the turnaround time, so that in itself should start to free up some activity. We've had tremendous amount of challenges on truck freight, and there's heavy demand because of competing commodities, steel, vegetables, fruit, whatever it might be that would take that flatbed traffic is now competing for the truck or for the lumber traffic. It's getting better. We saw peak prices that we were paying on a variety of different lanes in the last month now start to be more negotiable. We're still paying an inflated price, but they're not at the highest level that we've seen. And what took us a week to find a truck in this one lane now maybe takes 2 days. So the turnaround times are starting to become a little bit quicker. So the wood that we had sitting on order at the sawmill, or the wood that we had sitting on committed to at our distribution sites that was taking 2, 3, 4, and 5 days is now seeing that time be cut in half. And slowly but surely, that will start to see itself cycle through. So I think this wood that we have on order that's committed at the lumber yards or committed from the lumber yards by us now is starting to move itself into the marketplace, sitting at the closest to the consumer. How much of that is already committed to? A percentage of it is, but there is a large percentage that's not. And how does that filter through now at these peak prices? So the market, is now just starting to see what those peak prices are. And I believe the reaction is going to be slower than what the takeaway will be a little bit slower than what we've seen before, which then ultimately, what would that do next? That means then the mills that once had 2 and 3 week order files now aren't selling as much because the retailer is not replacing as much. Prices would become more negotiable, and I see that happening, over this period of time. And whatever number we ultimately bounce from, yet to be determined. But because we've gone up so high, like I said earlier, I would not be surprised, a 50% move, very, very quickly. And then we see what happens after that. But that's still, historically speaking, extremely, extremely high.
Yeah. I was speaking with Mike Wisniewski from Material Exchange a couple of weeks ago, and he brought up an interesting point that part of the challenge is labor, getting people back to work who've been on unemployment because of COVID, or getting new people to come work at sawmills, drive trucks, etc., is an issue. What do you think about that? Is a labor shortage part of the problem?
That's part of that. That's definitely part of the problem. We have seen that specifically in our operations team, whether it's our company-owned truck drivers or some of our contract carriers that work for us, as well as our materials handlers in our distribution sites. So getting people to work has been, a relative challenge. So we've had to go and create, during COVID, specifically at our operation sites for the materials handlers, what we call short-term pay increases, because they were in what we call hazard pay for that period of time, to help people know that we need you. You're our frontline guys, and if we can't deliver the product that we have committed to the customer, and vice versa, or unload the material that the mills are shipping to us, we're going to be up the river without a paddle, so to speak. So we worked through that, and now, because demand is so good and our volumes have gone up, we're trying to go hire new people, and the rates that we have to hire them are much higher than what we have historically seen. Which, that's good. That's not a bad thing. That means that our economy is good, our business is good, and if we can afford to pay it, we should. And when we can't, when business is slow and we have to, retrace or readjust, then you do it during those periods of time. But I think for the people that we currently have and the new people coming on, our industry is one that is, looks really, really, enticing, because, those wages and those opportunities are probably never better than what we're currently experiencing, and probably will experience for the next year or so. Mm-hmm. On the sawmill side, I can't speak specifically to them other than what we've heard with some of our close partners. COVID has created a phenomenon, specifically in parts of the rural South and in Canada, where unfortunately the benefit from the government, the short-term benefit that's been brought, is much, much greater than what's available on a wage. And that has been very detrimental in getting a lot of people back to work when they need to get them back to work. Those benefits are, again, short-term, so they will be going away. I haven't heard anything specific on, improvements there. I have heard substantial improvements in regard to people being at work because of health reasons, because of COVID. That has gotten a lot better, but as far as wage, not so much yet.
Gotcha. One of the biggest challenges contractors and developers are dealing with right now is They're thinking, all right, I need to price this job or bid on this as a subcontractor or general contractor, but I'm not going to build it for 6 months, 9 months, 12 months. Is there anything they can do to lock in that price? Or maybe a more general question is, what can they do with their suppliers to try to mitigate the risk of prices going up after they sign the contract? Anything?
So we have an offering where we provide a so-called our guaranteed forward pricing program. So we can go and help our clients go and price material that's going to start on a job, let's say 6 months to a year from now, and lock that price in for delivery of that product for that specified time. It's an upward hedge, or it's a hedge against upward momentum in prices. So as they're working with their builder and quoting a job, they can provide the customer an option to go and lock in all of this, some of this, or any portion of that volume at the price that they gave them, based on whatever they want to do, and then that we, Sherwood Lumber, would be able to then deliver that material for that specified time. So essentially, we are using the derivative contract to go out there and provide that customer a price based on the materials that they need, and recognize that derivative 2x4 Western Canadian SPF is just one item of many, many items that are produced at a sawmill. So, but we have done a tremendous amount of work and have an extensive database that allows us to go and correlate what all those other items that the customer needs to buy, the 2x4 9s, the 14s, so basically the studs, the plate stock, the headers, the rafters, and the floor joists. We can go out there and provide a price for all of those items and lock it in today for material that would deliver to the customer's yard a year from now or 6 months from now. And then a year from now, let's just say that project takes 6 months to deliver it, we would hold that price through the whole period until the volume that the customer locked in is fulfilled. And it's been a great tool for us. I talked about 1 billion board feet that we're going to do. We're trying to get up to roughly 20% of our overall volume in the guaranteed forward price, but we're going to do about 14 or 15% of our total volume in forward price. But going back to it, the clients that are doing it, it's a different way to sell. It does not provide opportunity to go and play the market to the downside. It's only a hedge to the upside. And what we've experienced, obviously, for the last 2 or 3 years with crazy volatility starting in 2017, 2018, the customers that are doing it with us just repeatedly do it with us. It just becomes in a way that they sell now. They don't have to worry about buying products, staging it, putting it on the ground, and then, doing what, they have to do to hold something for that period of time, tying up cash, right? So this allows them to go and sell 1 million board feet of material, and they don't have to pay for that material until it's being shipped to them or to the job site. So, a truckload at a time. And it's just an easier way for them to do it. And they recognize that, I might have miss some opportunity to the downside in playing that market. But knowing that I just have a price, I put a margin on top of it, and then it's all about scheduling delivery then after that. And I don't have to worry about any of it. It just makes it, it's just a lot of anxiety, that is taken off the table rather than going out there and trying to be an expert in the market. I have a partner that allows me to go and work with them by providing a single price on these single items, and then it helps me deliver it. It's just then I can go out there and work on the other items that I really make margin on. The lumber side is the one that's most volatile. It's sometimes the biggest parts of the package, if not most of the times, depending on the job, and provides them, like I said, it's just an ease of mind in going out there and doing things. So going back to it, the people that have been doing it for the last 2 or 3 years, saved them millions upon millions upon millions of dollars. We're delivering product today on items that are now, we have to buy the cash lumber at 3 times more than the selling price that we sold to the customer today. But we know that that's being offset by the derivative that we bought to hedge against that. And we take responsibility and to go out there and make sure that happens. And the customer, all they have to worry about is paying the invoice that I invoiced them on product that we committed to a year ago. That's about it.
Yeah. So for builders and developers who are saying that is a beautiful way for me to take that risk off the table, what do they do? Should they contact Sherwood directly? Do they need to talk to their dealer? How do they take advantage of this?
I think the best way is to talk to their dealer first and say, hey, we've heard about this opportunity with Sherwood Lumber, because again, we don't want to get in the middle of that relationship. We're focused on our place in the supply chain. However, talking to their dealer, if their dealer doesn't do business with Sherwood Lumber, then by all means reach out to us and we'll refer you to one that does, that we can go out there and help them go out there and secure product. All of these things are really job specific. The customers that understand that part of the process, and it's not a speculative tool. It's really to go out there and look at a job that they're quoting for years out or a year out, and they tie it specifically to that thing. And they can go out there and do that. And we do have customers that do have a higher risk tolerance, that want to go out there and have the opportunity to go and play to that downside momentum. And we'll advise accordingly, but understand that it's at your own risk. And but the ones that have been most successful on forward pricing, they just want to take the risk out of it and I just want to know what my price is, and I'm going to pass that through to my customer or to my clients or consumer, and just knowing that ease of mind that I don't have to worry about it anymore is enough for them. And like I said, it becomes a much bigger annuity. Our biggest client today, it stems from the developer understanding the forward pricing phenomena and how it gets quoted and how it gets serviced. And now we've been doing it for 4 or 5 years now. And his price, out when he commits to it, it's committed, it's done. But we know that it's all timing. So when you enter in a trade at the bottom part of the range, it looks like he saved or made all of this money. But in the grand scheme of things, he put his margin on top of it, the developer put their margin on top of it, and the project gets sold. And it's, the forest products costs that typically are involved in any of these things, we as wholesalers and our pro dealers as lumber yards always try to, think that they're timing the market to go buy the bottom and sell the top. But in the grand scheme of things, nobody's bigger than the marketplace. And I've never bought the bottom. I've never sold the top. The only times I've ever done it was by accident. Because I'm not big enough to know, what markets are going to do in any given moment, as far as that finite inflection point. However, I do recognize, when things are getting overcooked from an overvalued perspective, or things look like value and are oversold, and there's an opportunity to buy. So we're very good at picking those ranges. However, to think that we know specifically, or have that proverbial crystal ball to go out there and pick tops and bottoms, we don't.
Yep.
So we try to use the tools that are available to us to alleviate any of those notions. We really look at it from a long-term perspective and not a short-term one.
Yeah. So time in the market rather than timing the market, something to that effect.
Correct.
Yeah.
Yep.
So I want to be cognizant, make good use of your time. I have one more question, and then I'll ask where people can connect with you and where they should go. I have a feeling there's going to be a lot of people who are scribbling down, like, what was that program called? The Guaranteed Forward Price Program. They're going to be interested in how they can get a hold of that. But going back to a question that I mentioned, or something you mentioned earlier, what's your number one tip for someone who is either considering or is in the middle of a transition of leadership from one generation to the other? What's something that they need to be aware of that they may not be aware of, or just what's your number one tip for someone entering that process?
I think the the number one tip on in any relationship in a leadership team is you got to build the foundation of trust, and that comes through constant and clear communication, like the 3 C's, right? So like if you can't build that general understanding of trust and then being able to communicate differences and challenges or whatever it might be throughout your in any part of your leadership team, whether they're part of the family or they're just colleagues, right? Then you're not going to find a level of success. So building that baseline and understanding that opinions and different points of view, all of those things really matter into making better decisions and creating an environment of healthy conflict, meaning that we are going to challenge each other every single day. We are going to go out there and recognize that failure is part of business, and we are going to make have many failures throughout our business life and in life in general. But being willing to understand that we should not be fearful of that failure, and the context of not making a decision is actually making a decision. And so that's what we really try to focus on inside of our organization at Sherwood. And I don't know that that's anything other than cliche, but that trust and communication is, I think, paramount to anybody that wants to go out there and build a really, really strong team. We really understand specifically what we had to go through in COVID when we thought the world was going to end prior to it, right? Or like just in the beginning stages of it, and seeing how our team performed then, as opposed to falling when the marketplace went crazy and lumber prices were going through the roof. Seeing how we operated in those levels in times of high stress and uncertainty, specifically fearful, negative uncertainty to not knowing what's going to happen because we're going through a global pandemic and the economy is going to shut down. Seeing what they did during that and really recognizing that, oh wow, that was a great test of our trust and our communication and how we performed in those environments. If you can go and develop those from a leadership perspective, then you're going to do really well. And it's not something that happens overnight. It takes time, and it's not something that is just like a flip of a switch and it's going to be great forever. It's something that is always moving and always evolving, and you have to work very, very hard to continue to allow that thing to grow and allow that to evolve over time.
Great stuff. Couldn't agree more. If people want to connect with you, where can they go? Company websites, LinkedIn, social media? Where should they go if they want to find out more, either connect with you personally or find out more about your company?
So the easiest way to contact with me personally is on LinkedIn, or www.sherwoodlumber.com. Lots of information there in regard to not only guaranteed forward pricing, but the products and everything about our organization. I think it's a great place for people to visit. Outside of that, I think that's the best way.
Great stuff. Kyle, I really appreciate it. This has been very, very helpful, very, very enlightening, a lot of good takeaways. So thanks so much for taking the time to be on here, and thanks for everything you're doing.
Thank you, Todd. Thank you for considering me, and had a really good time. Thank you.
Absolutely. If you're a busy construction business owner, there's a chance that you don't have good visibility into your financials. You could be getting reports too late or not getting reports at all. Or maybe you're not even keeping your books at all, and you really don't have any idea what your numbers are. Think about these questions. Are your jobs really profitable? Do you even know? What's your real overhead, and what does it mean to your earning potential? If a bank asks for a balance sheet, do you even know where to start? Look, if you want to offload your bookkeeping or payroll headaches, or you just want better financial reporting, the Apparatus Contractor Services team can help you. Visit goapparatus.com to hear from other construction business owners they work with and see how they can help you. That's goapparatus.com. There you go. Hope you enjoyed that. As always, the show notes are available in the podcast player. The links are there. You can connect with Kyle. If you are interested in protecting yourself and your projects and your profits and maybe even your business from volatile material prices, 2 specific things you can do. Number 1, go check out Sherwood Lumber's Guaranteed Forward Price Program. You can Google Sherwood Lumber, SHERWOOD Lumber, forward pricing, Sherwood Lumber forward pricing. You'll find it. It'll pop up there. And ask your dealer to give it to you. Ask for guaranteed forward pricing. That's number 1. Number 2, if you want to lock in your prices and protect yourself, one of the not so apparent, but one of the best strategies is to use a pre-construction services agreement instead of bidding on a project, plugging in the price, and then hoping that it doesn't change. Use a pre-construction services agreement. Get paid to do a detailed estimate, detailed proposal. Get paid to lock in pricing, go through the purchasing process in advance, and get paid to do estimates. It is an absolute game changer. One of my number 1 recommendations for custom home builders, general contractors, and remodeling contractors is to transition your sales process to the pre-construction services agreement process. If that sounds interesting to you, you can find out more and actually watch a free training video that'll teach you 3 questions you can ask to convince yourself that there's value in getting paid for estimates. And you can actually use these questions on your next appointment to demonstrate the value of getting paid for estimates. You can get that free training video over at buildermasterclass.com/script. buildermasterclass.com/script. One more announcement. Stay tuned. If you're ready to mix it up, live event, networking with other construction business owners and leaders, if you're ready to break the pandemic shutdown, and if you're single and ready to mingle, so to speak, never mind, scratch that. If you are interested in a live meetup with construction business owners and leaders, I'm planning an event this fall of 2021. It's going to be good. Stay tuned for more details on that. As always, thanks so much for listening. If you can leave a rating and or a review on the podcast player of your choice, share this episode with somebody who needs to hear it, I would appreciate it. And if there's anything I could do for you, go to constructionleadingedge.com. If you're a business owner and you want to develop a strategy for the next 6-12 months, if you need to get your team right, if you need to do strategic planning, if you need to grow your business, if you need to eliminate profit bleeds, if you want more time, more money, more freedom from your business, I want to help. Let's schedule a free call. You can go to buildermasterclass.com/apply, APPLY. Fill out the form. I'll get back in touch with you and we'll jump on a call and do some strategy work for you. As always, thank you so much for listening. My name is Todd DeWalt. I'll see you next time. More than 80% of contracting firms report they're having trouble finding skilled labor, and greatly inflated material costs are eroding the bottom line. Look, to be profitable, you need to manage your critically essential labor force with greater precision. The solution is Struxy Labor Productivity Software. Fully customizable reports allow you to establish ambitious yet realistic daily production goals, or as I like to say, what winning looks like, and estimate how many crew members and workdays are needed to complete a job on time and under budget. Struxy lives in the cloud, and by reducing time clock rounding errors, this is a big deal, it will pay for itself on your very first project. Visit Struxy.com to estimate your annual savings with their cost-saving calculator and sign up for a 30-day free trial. That's Struxy.com, Struxi.com. Software built for hard